Lots of GDP numbers that have been coming out on the global level. This morning we had the Australian fourth quarter GDP number showing growth of 0.9%. Here in South Africa we're growing by 3.2%, in the US 5.9%. So we are seeing quite a big disconnect between some economies and others. And also interest rate differentials. It's quite interesting to note we had the Australian Reserve Bank hiking interest rates by 0.25% in yesterday's session.
Yeah, I mean, it's quite interesting if you look at Moody's map of GDP growth across across the globe. It's quite interesting to see that your kind of emerging economies and everything kind of towards Asia is starting to grow quite is growing quite nicely. The one that's moderating according to Moody's is Russia, which is obviously part of the BRIC pack. It's Russia within the big emerging economies, and therefore most of the GDP numbers that you're seeing at the moment is actually positive, which is very good news. You're just hoping that this will translate quite quickly back into earnings, and that you'll start seeing earnings increasing on the back end of that. Some countries though continue to be continue to be depressed, and those are mostly countries with infrastructural type issues that they're still trying to sort out, especially from a banking perspective. Iceland being one of those.
Well, looking at what's driving some of the growth in those regions, we know it's all got to do with restocking as well, and no real underlying demand coming through from the consumer. When you look at a country like Australia, which is expanding, India as well doing well, and China, but also we've got to take into consideration that we have seen the restocking process taking hold in those regions, and unemployment's still a little bit of an issue.
One has to ask oneself, what will drive the consumer not to spend? And if you look at G7, there's good reasons why the consumer will stay away from the spending party for a little bit longer than they would be, for instance, in emerging markets. Emerging markets, you've got a consumer base that haven't really been affected to the degree that your G7 country consumers have been affected by. So they're merely just showing you, the first step in economic recovery is usually GDP growth. You get some form of positive numbers out as far as GDP growth is concerned. Your next numbers that you start seeing is things such as employment numbers. You start seeing consumer spending start accelerating. That you just have to wait for, and there's no reason why emerging market economies and in the likes of Australia, I put into that basket as well, shouldn't be in that situation. Are
they being a little bit strict in terms of the interest rate environment there? Because now interest rates are at 4%, and they've hiked 4 times since late last year. But we know that the Australian consumer is also still in a little bit of a pickle.
Look, it's all about central bank policy and how they run their central bank and what they feel is opportune. Australia never saw the recession that we saw elsewhere in the globe. It's a bit like China. China never saw the recession that you saw elsewhere in the globe. And on the back end of that, if they're seeing pressure as far as inflation numbers are concerned, they'll start hiking rates on the back end of that. We won't be in a dissimilar situation here in South Africa, especially when you start looking 12 and 24 months out. Once we start seeing a hike in inflation numbers, which certainly isn't on the cards, for this year, but certainly for next year and the next year, you could potentially start seeing some pressure. You'll start seeing, a hike as far as rates is concerned.
Looking at the US, Fed Chairman Ben Bernanke said that we might be seeing rates hiked sooner than later, and it's interesting because we keep hearing that interest rates are going to be kept low for an extended period of time, and then we hear comments such as sooner rather than later. What exactly is going to happen in the US? We know that deflation is still a little bit of an issue, but when we look at that latest GDP number of 5.9% growth in the US, one does start to get a little bit confident in terms of things turning around there sooner.
Consumer spending in the US, for me, makes up a massive portion of their GDP. So if you look at consumer spending, you need to have consumer spending turning around quite aggressively in order for you to start hiking rates. They're not in that situation yet. You're seeing GDP growth, you're starting to see earnings numbers slightly better than expected, in certain instances slightly worse than expected. You're sitting with a very fragile economy still. And on the back end of a fairly fragile economy, you're trying to see where this thing is going to be going. Certainly from a consumer spending perspective, you need to see a rebound in that, and then you can start looking at potentially hiking rates. It's quite contrary to what he said before, though, in the sense that we'll keep rates as low as we possibly can and for as long as we possibly can. That certainly is quite different for him to start saying.
Things change overnight, it seems, in the world of business. The PMI numbers that were released globally, we saw the number out of the US coming under pressure, China as well. But here in South Africa, we lagged at one stage. We've now surpassed certain countries as well, like the likes of China and the US. We're now currently sitting at 60.4. So that is making us look like we are starting to show some kind of sustainable recovery, Cobie.
Yeah, I mean, look, South Africa is, you know, when you start getting export pull as far as South Africa is concerned, you start seeing numbers coming through. Remember, South Africa is a very small component of the world. You know, if you just look at growth and you look at, you know, from a GDP perspective and size perspective, so you're going to see a bounce around in these numbers, you know, and that's quite easily to happen. And South Africa is no exception to that. Much more difficult for, you know, a very large country, you know, such as the US, for those numbers to bounce around. But South Africa, the number can bounce around quite aggressively. So, you know, once you start seeing demand for resources start taking off, you know, and you start seeing the country turning around, you start seeing PMI numbers, you know, start coming through more and more aggressively, and, you know, beyond the 50 points, you know, it'll start happening.
I remember before the recovery took hold globally, a lot of people were expecting China to pull us out of the recession, and it seems that it has played that role and played quite a significant role. China's role going forward, we know that they are trying to cool things down to avoid bubble territory.
You know, when they talk about bubble territory in the US, in China. So if I talk about bubble territory in China, it's not not the same as what you've seen in the US and what you've seen as far as markets are concerned. You know, if you look across the board and you look at the Chinese market, there's some very well-priced businesses still within the Chinese market. You know, you look at companies in the oil industry, you look at companies in the electrification industry and so on. There are companies that are expensive, but there are companies that are, you know, that you can still trade off single-digit, you know, multiples as far as price to earnings ratios are concerned. You know, China is merely just growing at a very high rate, and they're merely putting up rates in order to, you know, to quell consumer demand for credit and those kind of things. That's all they're trying to do at this stage. Remember that they're sitting with a huge amount of money, you know, that they've taken off the Americans over the last decade, and that they're deploying into the economy on a continuous basis. And they're trying to urbanize people, and that's an ongoing program as far as they're concerned. As that continues, you're going to see, you know, Chinese economy growing and becoming larger and larger. You've got to go some before they get to a $14 trillion economy, because they're only about a $4 and a $5 trillion economy at the moment. But, you know, by 2020 or 2030, that could be a reality, you know, as far as numbers are concerned.